What is shaking, Crypto Nation? Welcome back to Bitcoin Bulletin, where we bring you the pulse of the market, live and direct. The speed of change in this space is absolutely blistering, and if you're not plugged in, you're already behind. Today, we've got a lineup that's going to blow your minds, packed with insights that could redefine how we think about wealth and digital assets. Get ready, because the next big moves are happening right now, and you're going to want to be in the know. Stick around, you won't want to miss a single second of this. First up, we're diving deep into a story that's talking about seismic shifts in wealth, with whispers of new financial dynasties emerging from the digital frontier. Could the next Rockefellers or Rothschilds be building their empires on Bitcoin? We're talking trillions with a T, folks, and the implications are massive. Then, we'll look at how Bitcoin is charting a course through its most balanced bull run yet, hitting incredible price points, while a forward-thinking company makes a significant strategic play, stacking more of the digital gold. What does this sustained growth mean for the future? We've got the details. Following that, prepare for a fascinating look at ETF flows, as a clear divergence between Bitcoin and Ether is hinting at a potential altcoin season. Are we on the cusp of a major altcoin rally, and what signals should you be watching? We're breaking it all down. And finally, we're exploring a groundbreaking new paradigm for institutional investors, focusing on decentralized governance and the burgeoning trend of Bitcoin treasuries. This is about the future of finance, and it's happening now. You need to know about this. Don't go anywhere, hit that like button, subscribe, and ring that notification bell so you never miss an update. The generational wealth shift is here. Prepare for a financial earthquake as trillions are set to change hands, potentially reshaping global wealth structures as we know them. The latest analysis suggests that a massive transfer of wealth, estimated to be in the tens of trillions of dollars, is on the horizon, primarily from the baby boomer generation to younger heirs. This isn't just a financial forecast. It's a societal shift with profound implications for how wealth is accumulated, managed, and preserved across generations. At the heart of this unfolding narrative is Bitcoin, increasingly seen not just as a digital asset, but as a foundational element for building future financial dynasties. Experts are drawing parallels to historical financial powerhouses like the Rockefellers and Rothschilds, suggesting that a new era of generational wealth, rooted in cryptocurrency, is dawning. The sheer scale of this impending transfer, projected to be around $84 trillion in the United States alone by 2045, with significant amounts also expected in Europe and Asia, underscores the transformative potential of digital assets. Younger generations, demonstrably more receptive to and knowledgeable about cryptocurrencies, are poised to inherit and deploy these vast sums into a market they understand. This contrasts sharply with previous generations who primarily invested in traditional assets like land, industrial enterprises, and equities. The narrative is shifting towards decentralized rails and blockchain technology as the new infrastructure for wealth creation and preservation. This trend is further amplified by significant institutional adoption, exemplified by major players like BlackRock launching Bitcoin exchange-traded funds, which have already seen substantial inflows. Even political figures are acknowledging and embracing Bitcoin, with pledges to create strategic reserves, signaling a growing acceptance and integration into mainstream financial and political discourse. The emergence of Bitcoin dynasties isn't just a speculative prediction. It's a potential outcome of this confluence of generational wealth transfer, technological innovation, and increasing institutional and political endorsement. The question is no longer if this shift will happen, but how significantly Bitcoin and other digital assets will shape the financial landscape for decades to come. But is this the only seismic shift happening in the crypto world? Stay tuned as we explore how Bitcoin's current bull run is being hailed as the most balanced in history, and what that means for your portfolio. The balanced bull run and strategic accumulation. Bitcoin has recently surged past the $113,000 mark, continuing its impressive climb and solidifying its position in what many analysts are describing as the most balanced and sustainable bull run in its history. Unlike previous cycles characterized by extreme volatility, euphoric highs followed by sharp, fear-inducing crashes, the current market trajectory is marked by measured gains and more predictable, less severe retracements. This steady ascent suggests a maturing market, potentially driven by more informed long-term investors rather than speculative traders susceptible to emotional swings. This stability is particularly noteworthy given that it's occurring even as interest rates remain relatively high, challenging the long-held notion that cryptocurrencies thrive only in environments of ultra-loose monetary policy. Adding to the bullish sentiment, the Smarter Web Company, a London-listed tech firm, has once again demonstrated its commitment to Bitcoin as a core treasury asset. The company announced its latest strategic purchase of 45 Bitcoin, valued at approximately $111,758 per coin, bringing its total holdings to an impressive 2,440 BTC. This consistent accumulation, part of their stated 10-year plan, highlights a growing trend of corporations integrating Bitcoin into their long-term financial strategies, not just as a store of value, but also as a means to facilitate business operations, with the company even accepting Bitcoin for its services. The firm's reported year-to-date yield on its Bitcoin treasury is a staggering 56,105%, underscoring the potential financial benefits of such a strategy. This approach by the Smarter Web Company, coupled with the market's current balanced momentum, paints a picture of a crypto landscape that is not only growing, but also evolving towards greater stability and strategic integration. The absence of extreme FOMO, fear of missing out, and panic selling, as noted by analysts like Jason Pizzino, indicates a more grounded and resilient market, signaling potential for continued, sustainable growth. But as Bitcoin solidifies its steady climb, are other digital assets about to steal the spotlight? We're looking at ETF flows that could be hinting at an incoming altcoin bull run. ETF divergence signals altcoin season potential. As August draws to a close, the cryptocurrency market is showing intriguing signs of a potential shift, with a notable divergence in exchange-traded fund, ETF, flows between Bitcoin and Ether hinting at an incoming altcoin bull run. While the broader market has experienced a typical end-of-summer lull in volatility, largely attributed to expectations of forthcoming interest rate cuts and robust fiscal spending, creating an amplified Goldilocks scenario, the specific flows into crypto ETFs are telling a different story. U.S. Ether ETFs have seen consistent net inflows totaling $3.69 billion this month, extending a 4-month streak of positive sentiment. In stark contrast, Bitcoin ETFs have experienced significant outflows, exceeding $800 million, marking the second highest outflow on record. This divergence is being interpreted by many analysts as a clear signal of investor rotation, with capital moving out of Bitcoin and into Ether, potentially setting the stage for a broader altcoin rally. Market analysts like Ray Yosef, founder of the crypto app No Ones, suggest that the rise of altcoin treasury companies could be the catalyst needed to ignite the final phase of the current market cycle and usher in a new wave of altcoin dominance. Major players and even corporations are increasingly allocating significant capital towards blue-chip altcoins such as ETH, SOL, BNB, and CRO, viewing them as valuable treasury reserve assets. This institutional endorsement is boosting the perception and utility of altcoins, indicating that institutional capital is no longer solely focused on Bitcoin. Predictions from figures like Arthur Hayes, CIO and co-founder of Maelstrom Fund, forecast massive potential rallies for specific altcoins like ENA, ETHFI, and HYPE by 2028, further fueling optimism. In the immediate trading landscape, while Bitcoin faces potential selling pressure around the $113,600 level, market focus appears to be shifting towards smaller altcoins, with indices tracking these assets showing stronger recent performance compared to broader Bitcoin indices. This trend, combined with growing institutional interest in diversifying beyond Bitcoin, suggests that the market may be poised for a significant altcoin season, driven by innovation, adoption, and strategic treasury allocations in the emerging digital asset ecosystem. But as institutional money flows shift, is the very structure of how assets are managed undergoing a fundamental change. We're exploring a new paradigm for institutional investors, focusing on decentralized governance and Bitcoin treasuries. Decentralized governance and the Bitcoin treasury revolution. The landscape of institutional investment is undergoing a profound transformation, marked by the rise of decentralized governance and the strategic adoption of Bitcoin treasuries. This evolution signals a new paradigm where control, decision-making, and asset management are shifting away from traditional centralized models towards more community-driven and transparent blockchain-based systems. At its core, decentralized governance empowers stakeholders, allowing them to participate directly in the direction and evolution of protocols and platforms. This participatory approach fosters greater trust, security, and alignment with user interests, moving away from opaque, top-down decision-making processes. Hand in hand with this shift is the burgeoning trend of Bitcoin treasuries, where companies and investment funds are increasingly allocating significant portions of their balance sheets to Bitcoin. This isn't merely about speculative investment. It represents a strategic embrace of Bitcoin as a legitimate store of value and a hedge against traditional financial system vulnerabilities. The appeal lies in Bitcoin's finite supply, its decentralized nature, and its growing acceptance as a global reserve asset. By holding Bitcoin on their treasuries, institutions are not only diversifying their assets, but also aligning themselves with the future of finance, which many believe is intrinsically linked to digital assets and blockchain technology. This movement is attracting significant attention from institutional investors seeking robust, transparent, and resilient assets. The integration of decentralized governance principles into treasury management further enhances this appeal, offering a more equitable and sustainable model for growth and stability. As more entities explore this new paradigm, the lines between traditional finance and decentralized systems continue to blur, paving the way for innovative financial structures and greater accessibility to the digital asset economy for a wider range of investors. And that brings us to the end of another action-packed Bitcoin Bulletin. Let's quickly recap the biggest stories and make sure you're subscribed. What a ride! We saw Bitcoin potentially paving the way for new generational wealth dynasties amidst a $84 trillion transfer. Then, we discovered Bitcoin is in its most balanced bull run yet, with companies strategically buying the dip. We also learned that ETF flows are hinting at a massive altcoin season on the horizon as investors rotate capital. Finally, we explored how decentralized governance and Bitcoin treasuries are creating a new paradigm for institutional investors. That's all the news that's fit to print. Don't forget to smash that like button, subscribe to Bitcoin Bulletin for all your crypto updates, ring that notification bell so you never miss a beat, and follow us on all social media platforms to join the conversation. We'll see you in the next one.